Financial reports can feel like they're written in a completely different language. But what if we could just give the company a quick health checkup? Well, that's exactly what we're going to do today. We are cutting right through the jargon to get to the real story behind the latest numbers from India's National Commodity and Derivatives Exchange, or NCDEX. All right, let's set the scene. On November 12, 2025, the NCDEX Board of Directors got together and released a big, detailed report on how the company's been doing for the last 6 months. We've come through that entire document, and now we're going to walk you through exactly what it all means.
So here's our game plan. We'll start with the headline, what the board actually announced. Then, we'll check the company's vital signs by decoding its profit and loss statement. After that, we'll gauge its overall strength with the balance sheet, follow the money with the cash flow statement, and then, my favorite part, we'll dig into the fine print. Finally, we'll wrap it all up with the big takeaway.
First up, the board meeting's outcome. So what was this big announcement all about anyway?
Well, at its core, it's pretty simple. The main point of this meeting was to give the official stamp of approval on the company's financial results. This report covers everything from April 1st to September 30th, 2025. You can basically think of it as the company's official half-year report card.
Okay, on to Section 2, decoding the profit and loss statement. This is kind of like the first most important vital sign we're checking. The big question, did the company actually make money or did it lose it?
Before we jump into the numbers, there's a quick but really important bit of jargon we need to clear up. You're going to see the words standalone and consolidated. Standalone is just the main NCDEX company. Consolidated, on the other hand, wraps in the numbers from all the other companies it owns. For now, we're going to focus on standalone to get a really clean look at the core business.
So, this is the big one. After you add up all the money that came in and subtract all the money that went out for those 6 months, where did NCDEX end up? Was it in the black or was it in the red?
And here it is, the bottom line. For the 6 months ending in September 2025, the company posted a standalone net loss of 21.7 million rupees. That's the diagnosis right there. Now let's figure out how they got to that number.
Now this is where the real story is. Take a look at the top line. Total income, it actually went up from about 242 million rupees to 261 million rupees. That's good, right? But look at the next line. Total expenses grew even faster, jumping from 520 million to over 570 million. And that's the whole story in a nutshell. Even though they made more money, their costs exploded by a much bigger amount. And that's exactly what flipped them from a nearly 29 million rupee profit last year to a 21 million rupee loss this year.
Okay, so we know the company lost money in its day-to-day operations, but that's just one piece of the puzzle. Next up, we look at the balance sheet. This gives us a snapshot of the company's fundamental financial muscle.
The balance sheet is actually built on a really simple, powerful idea. Everything a company owns, that's its assets, has to be paid for by one of two things. Either with money it borrowed, its liabilities, or with money from its owners, which is its equity. And those two sides, they always have to balance.
And this chart really just says it all. A massive 86% of NCDEX's assets are funded by equity. The owners own money. Only 14% comes from debt. To put it simply, the company owns almost everything it has outright. That is a very, very strong sign of financial stability.
And here's where it gets really interesting. Even though they posted a loss, the company's total asset base, it actually grew. It went from 7.33 billion rupees in March to 8.5 billion by September. So how is that even possible? How can you lose money but get bigger? Well, for that, we need to follow the cash.
And that brings us right to our next section, following the cash. Profit and loss can get complicated, but cash is simple. This statement tells us exactly where real money came from and where it actually went. First, let's look at the cash from its main business, its day-to-day operations. And yeah, this lines up with what we saw before. The company's core activities actually burned through 39.3 million rupees in cash over these 6 months. They spent more actual cash running the business than they brought in.
But, and this is a huge but, here's the other side of the story. While the business operations were using up cash, the company brought in a huge chunk of new money, over 105 million rupees from what's called financing activities. And that's usually code for money raised from investors.
So now we have a really clear picture. The core business is in a tough spot. It's burning cash. But the company is doing a great job of bringing in new investment capital. It's more than enough to cover that shortfall and even grow the whole company.
But why does the business need this life support in the first place? For that, we have to read the fine print.
And this brings us to what's often the most interesting part of any financial report, the notes. This is where the company explains the why behind the numbers, and it's where you find the real story.
And boom, here it is. We found it. A direct quote from the report. It explains that because of an order from the big market regulator, SEBI, NCDEX had to suspend trading on some of its most important commodities, like chana and mustard. Basically, a huge part of their business was put on pause.
And this isn't just some short-term problem. The report confirms this suspension has been extended all the way to March of 2026. Look, if you're an exchange and you make money when people trade, having some of your most popular products pulled from the shelves, well, that is a massive blow to your revenue. This is a key reason the core business is struggling.
So how'd the company fight back? Well, this is where that financing cash came from. The notes lay out a plan to raise a bunch of new money. The board approves selling new shares to private investors for about 197 rupees a share. Their goal is to raise almost 7.8 billion rupees, and they've already got over 1 billion in the door. This is the company actively stocking up its war chest to get through these tough times.
Okay, we've checked the vitals, we've looked at the overall structure, we've followed the cash, and we've read the doctor's notes. It's time for our final takeaway, the overall prognosis from this corporate health checkup.
Let's just boil it all down. The diagnosis is complicated. On the one hand, yes, NCDEX posted a net loss. Its main business is burning cash, and it's facing a huge external challenge with those trading suspensions. But on the other hand, the company has a really strong, low-debt foundation, and critically, it's proven it can attract serious new investment to fuel its future.
And that leaves us with the big, critical question for the future. We know the problem, and we know they have the money to fix it. The great unknown is their strategy. What new products, what new markets, or what new ideas will NCDEX come up with to get around these challenges and steer the company back to making a profit? Now that is the story to watch.